This is 8-Minute Insights by Texture Capital, bringing you concise, expert insight for better markets. And now your host, Richard Johnson.
Hello and welcome to the latest episode of 8-Minute Market Structure, where I speak with industry experts and get their take on the most important market structure issues. It's a simple format, the same question for every guest. If you were building a new market structure from scratch and could change one thing, what would it be? One topic, no prep calls, just 8 minutes of concise, expert insight for better markets. My name is Richard Johnson. I'm the founder and CEO of Texture Capital. We're a FINRA member and SEC registered broker-dealer focusing on digital asset securities. We help clients more efficiently and directly participate in private markets by providing tools for tokenization, issuance, and secondary market liquidity. Today's very special guest is my friend and former colleague, Jay Biancamano. Jay is Managing Director and Head of Tokenization at State Street's digital division. Prior to State Street, Jay has had a storied career on Wall Street, including ITG and LiquidNet, where we both overlapped, and is an adjunct professor at Rutgers University. So I'm delighted to have Jay on 8-Minute Market Structure and look forward to hearing his perspective. With that, let's get right into it. Jay, if you were building a new market structure from scratch and could change one thing, what would it be?
Thank you, Richard. Pleasure to be here. And that is a great question. And, interestingly, I think we are building a new market structure. So if you don't mind, let me pontificate on, how I think we should approach that. So a little history. I think if you look at, in our background, obviously, as Richard said, is ITG and LiquidNet. And at those firms, we were able to take what was an equities market structure and expand on it. These were the early days of Reg ATS, the early days of Reg NMS. And I think what you've seen, grow out of that is a market structure we have today, where we have a tremendous amount of liquidity. We have a tremendous amount of democratization in the market. We have a lot of providers. We have market makers. We have institutions. We have retail market players. And I think it's a market structure that a lot of the crypto firms, the Geminis and the Coinbases, are looking to replicate. And I'll seek into what we have now in the digital space, because obviously our big interest at State Street right now is certainly in the crypto and the digital asset space. And what we've seen come out of the crypto markets is a very disparate market. We all know crypto assets can be traded at over 200 different venues. And we won't even talk about the DeFi types of exchanges and the esoteric type of coins that can be traded outside of the traditional exchanges. But we do see this market structure has come into play in the crypto space, and it's a very attractive market structure. And what I mean by that is, if you think about Coinbase, for example, they have over 20 million users, Gemini, millions of users, and then you compound that with exponential number of exchanges, exponential number of market makers globally, and you have a very interesting market structure. But it does not really address what the regulators want to address, and that's really for an overarching or a central kind of order, right? And it's something I call the CBBO, the crypto best bid and offer, right? So I think in that current market structure, the crypto market structure, there is a lot of opportunity for firms, the larger firms, to build upon what they've developed and then maybe come together and create some sort of SRO to get ahead of the regulations, to create that foundational best practices for the crypto space. And I think that would allow certainly the crypto exchanges, to create a foundation that would give reassurance to certainly regulators in the US, where we're hoping for an ETF to be approved by the SEC. And then, future-looking market structure, and that's really where I'm excited, because really where the opportunity for State Street and institutions is more about, you have a market structure that's developed, matured in the fixed income and the equity space, and then you have this crypto market structure. But what happens when you have those traditional assets, which are already trading in the traditional space, start to trade on blockchain? That is an intriguing idea, and that's an idea that's going to come to fruition. Certainly, we're starting to see issuers like yourselves, Richard, in the private equity space and the private debt space, coming out with these offerings and issuing tokens for private debt and real estate and private equity, IP. Give it, anything out there, right? Anything you could value and transfer, that's what you can do on a blockchain. But I think we really are excited about the market structure that we can develop around that. We could look at what developed in the equities markets and try and figure out a way for traditional assets to trade on the blockchain, but do so in a more regulated way, right? So, I think the players in the future space are going to be the crypto providers, such as the Geminis, the Coinbases, and whatnot. And then you're going to have the ICEs and NASDAQ, which we know are very interested, invested in the space. And I think what will come out of that is a market structure that will allow for traditional assets to accelerate on the blockchain. And what I mean by that is, I think you'll start to see, traditional assets, certainly in the fixed income space, being issued on the blockchain, and require firms like State Street to service those assets, the blockchain assets, the tokenized assets, in a way that we do traditional assets. So I think if I'm building that market structure, I'm trying to put together more of a cooperative type of market structure where the players understand the technology and they take the traditional assets, which we're all used to investing in. And then once you have that market structure in place, then you start to bring the crypto type of assets on board. You start to see more normalization in the, in the Bitcoins and the ETH and the Cardanos and like that. So yeah. Hopefully that wasn't too long-winded, but that's kind of where I see the market right now. And I could tell you, from a foundational standpoint, that's really how State Street's looking at the market. We really think that private assets, whether they be debt, equity, or anything more tangible, are the way that the market structure is going to develop. And I think if you think 10 years in the future, everything will be on the blockchain. We will not have single asset type of venues. I think you'll have everything, and we've talked about this, where one asset could offset versus another asset, right? And that's how we have atomic settlement. And tokenization is really where, I think the market is going to move, and we're excited about it. So
yeah, no, there's a ton. I agree with a lot of what you just said. There's a ton of potential here, and that's why I kind of set up Texture Capital and even this podcast, is because I feel like we are building a new market structure from scratch using this technology. And I want to figure out what are the lessons we can learn from the traditional markets on the one hand, but also from the crypto markets on the other hand. And I think, so, I think private markets is a great space for us to work in initially here, because there's not a lot of legacy technology. That's been Texture's focus anyway here. We can kind of almost start from scratch, and then eventually develop it out and move into public markets, move into equity, real assets, etc. You mentioned the regulatory side of things, which is pretty unclear. Let's just say that right now. And I would definitely support more regulatory clarity. And there seems to be some internecine fighting between the regulators and the SEC, and the SEC is certainly pushing for more control. You mentioned the SRO concept in the crypto space, which has been put forward before. And then we even had Coinbase coming out and saying, oh, we should have a separate regulator for crypto. I don't agree with that. I certainly don't agree with a separate regulator. If anything, we need fewer regulators, not more. And just a warning, you'll know that what I'm talking about here, SROs aren't necessarily a good thing. Remember that the New York Stock Exchange was an SRO in the early 2000s, and they fought tooth and nail to prevent any innovation around electronic trading. So they're not necessarily a good thing for market structure. Thank you. That was very helpful, Jay. And now you recently did a survey at State Street. We've got a couple minutes left. Can you tell us a bit about what that survey told you about, I guess, investors' attitudes to tokenization, crypto, and markets, and so forth?
Absolutely, yeah. So, we did a survey, I believe it was with Oxford, and I'll just have to confirm that with you. But, we went out to our constituency. And this is the second time we've done it in a couple of years, and there was an increase in interest. I know that the interest from institutional investors, certainly a State Street type of investor, they're looking to invest more in crypto space, and we're seeing it, right? That's why we developed State Street Digital, and it is more of a reaction to what clients are anticipating what they need to do in the next 12 to 18 months, rather than being reactionary to like clients are ahead of us. What we're kind of seeing a couple of exciting developments, and the survey firmed that up for us, and validated that. But one of the developments we are seeing is that you're seeing more investment in multiple tokens, right? Multiple crypto, and the servicing needs around multiple crypto is where we're taking. I like to tell everybody, Bitcoin and Ethereum were so last year. Really now it's about DeFi and these more esoteric tokens. Even things like gaming tokens and NFTs are coming up in these client conversations. And the critical piece is clients are saying to us, listen, we need for you to expand your ability to service those assets. And we've announced a couple of partnerships with other firms. And that's really where the survey, gave us a little more foundation. Is we understand that it's not really just about, Bitcoin and Ether anymore. We know that, you and I know that, and the industry knows that. So we're looking to service that. And the other thing that's very, very interesting is a lot of these firms that are in the space, certainly the ones that are offering funds, even including the ETFs and the ETPs, but also the hedge funds, they're saying to us, we need State Street to be our service provider because our clients want that, right? And we're that name. That's people said, once we're State Street's in that business, then this business is real. And it was funny, anecdotally, I spoke to I would say a competitor about 3 weeks ago, and they said when we announced State Street Digital, their CEO said, "That's it, that's the moment," right? And so,
oh wow.
Yeah, so credit to Nadine and Ron for doing that. So we our clients are heavily invested in the space. Certainly from a education standpoint, they're heavily invested in the space because they know it is not no longer burgeoning, but they haven't been able to pull the trigger for a number of reasons. A lot of firms want to invest in ETFs. A lot of firms really want that, that custody solution that State Street is looking at. So there's still a number of things that have to happen, but the survey did, like I said, validate everything we thought and more. So it was well above. And the other thing it talked about was digital assets above and beyond crypto. So I think that's really where we could circle back here to say, firms are going to be looking for that market structure. And just to get back for the SRO thing, I think one of the things in creating SROs in this space has always been that there was a lot of self-interest there.
Yeah.
And the market structure back then was NASDAQ in New York, and that was it. And that's all that happened. I think in this space, I think the regulators are trying to catch up to what the crypto exchanges are doing. I think it would be something that's welcomed by the space. Certainly, the SEC is understands that blockchain technology, when applied to traditional assets, is very valuable. It's the liquidity and the market structure around, cryptocurrencies where they're a little hesitant. And I know that that's not something that can be solved like overnight.
No, there's a lot of work to do. It's great that someone like State Street is in the space, and it's great that you're over there at State Street leading the charge, because I know you have a deep appreciation of markets. Thank you very much for your insights, Jay. I hope to have you back on a future episode one time. Absolutely. Love to do this, Richard, and it was a pleasure having me. Great. Take care. Take care. Cheers.
This has been 8-Minute Insights. Be sure to follow Texture Capital on LinkedIn, where we will release a new episode every week. You can also find us on Twitter at texture_capital and on the web at texture.capital. The foregoing discussion is for information purposes only and does not constitute a solicitation to buy or sell securities. Private securities offerings are not registered with the SEC and are considered highly speculative. An investment in private securities may result in the loss of your entire capital contribution. Blockchain is a new technology and unproven in financial markets. There is no guarantee that tokenization will enable any secondary market liquidity in the future, and your investment may remain illiquid.